Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, 𝗘𝗀𝗁𝗘, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, 𝗘𝗀𝗁𝗘.
Welcome in, 𝗘𝗀𝗁𝗘 here with Real Estate Radio Live. I hope this message and this podcast finds everyone well as you start to listen today. I'm back at it, as I mentioned again. We're going to be doing at least one show a week and maybe more. We're going to have some special guests coming up soon, so please stay tuned for that and be sure to tune in. Any more information that you want, 𝗟𝗡𝗙live.com. That's 𝗟𝗡𝗙live.com. You can download those iTunes, the podcasts, and anywhere else you can get podcasts. Please take a look, pass it on to your friends and associates and family members. The focus of the show, I will always remind everybody, as always has for the last 12, 13 years, it has not changed. It's education and information. That's what you will find at the focus of this show. I am in the mortgage business. I have been for 23 years. I do podcasting on other real estate ventures, but primarily the mortgage business. So most of you know that. If you need any education specifically or details or consultation when it comes to financing residential mortgages, I'm the person to talk to. If I could help you with financing your purchase, refinancing, structuring a hard money deal, maybe a cross collateralization, bridge loans, we do all that kinds of things. I also have a network of great experts and professionals as part of my group. If you're in the need for a real estate agent to help you buy or sell a home, if you need financial planning, if you need CPA tax advice, any of that, I have a network of people who are trusted advisors at a very high level, happy to help you and refer those people to you if you need anyone like that. So today our focus is going to be on reverse mortgages and alternative financing. The reason why I wanted to educate and inform everybody of this today is for really the main reason of the rates, because interest rates are so high. So because interest rates are still in the 7 to the 7.5 range, now is a great time to really educate people on a few things. One is reverse mortgages that are certainly a tremendous benefit for people that are 62 or older, number one. And then I'm going to discuss some alternative financing like hard money, private money, also parents helping fund your purchase and loaning the money yourself, family funding, things like that. There's some interesting things that a lot of people don't think about in markets like this, so we're going to cover that. So let's first jump into reverse mortgages. These are a great product. So if you're listening to this podcast and you don't have to be of the age, if you're listening to this podcast and you have a parent, grandparent, aunt, uncle, friends, neighbors, anybody that you know that's 62 or over that you think might be struggling to be, I'll use this line, and I think this happens, perfect candidate for a reverse mortgage, ideally speaking, is someone that is house rich and cash poor. What does that mean? So that means you might have a home, let's say you've been for 40 years, and you own your home free and clear, and it's worth $2 million. And maybe you don't have any pension. Maybe a spouse passed away and you have very little Social Security. Maybe you're living on, $2,000 a month total income. A lot of people are doing that. And you're struggling with Social Security and other costs. And you're kind of paralyzed in the fact that you can't leave your house and do anything because you have this appreciating asset of a home. In this example, $2 million, you own it free and clear, right? And yet, it's hard for you to leave the house and go on vacation or do anything or help your children or grandchildren because you're strapped for cash. This happens all the time. So for people like this, the reverse mortgage is a great vehicle. Unfortunately, the reverse mortgage has had a lot of negative press in the past because unfortunately, no matter what we do in life, there always will be unscrupulous characters. There will always be people that the 2 or 3% of people that are bad people, bad actors that don't represent their industries well. No matter what industry you're going to have those. The mortgage industry has them too. So years ago, before there was really guardrails in place and safeguards in place and counseling and things like this, people got in trouble selling reverse mortgages to the elderly. Okay. They were misinformed, they were misguided, there wasn't safeguards in place. There are safeguards in place now that make sure that these kind of things don't happen. When someone is considering a reverse mortgage, they have to get, first of all, they have to make sure they're cognitively available so they could speak to someone, educate someone. Typically, they get family members involved now too. Also, there's mandatory counseling. You have to talk to a third-party counselor to make sure you completely understand the reverse mortgage. So in other words, if I was discussing a reverse mortgage with my client, they would say, great, Joe, this sounds great. I think this is perfect for me or my mom or my dad. Great. So that's the first step. The second step is you have to set up independent third-party objective counseling with FHA, Fannie, Freddie counselors that will take you through that process to make sure that no one's trying to sell you on something that's not really good idea for you to get into. So there's great safeguards in place. I will tell you the reverse mortgage is a great product. We do them. We have an in-house program. We do them. And more people are using them for the right reasons. Imagine if you have a home that's owned free and clear, you have very little loan on it, and you have all this equity, and you're trying to maybe remodel your home. Maybe you want a new kitchen or a new bathroom, or maybe you want to help your grandchildren, with a down payment on their new home. Or maybe you want to take a big vacation and you're strapped, you really don't have the cash. The great part about a reverse mortgage, and I'll give you kind of a summary of how it works. It's pretty simple, just in the word, reverse. So really what you're doing is you're borrowing money against a house, but it's instead of you making the mortgage payment, that payment is appreciating. The payments are appreciating in terms of every single month. And I'll give you an example. Let's say you get a reverse mortgage on a house that's worth $2 million and you get a $500,000 cash out or equity line of credit. Let's just say, for sake of purposes, you take the entire $500,000 and you put it in an account, and now you're giving yourself a certain amount of money, you're paying yourself some money, or you're taking a vacation or using that money for whatever you wish. There are no payments due on that $500,000. There are no payments due on that $500,000 ever for the life of the loan or your life. So how it works, there's an established interest rate, okay? So whatever the established interest rate is, there is a payment that is established. And let's say, for sake of conversation, that payment's $3,000 a month if you were making that payment. Now, instead of you making the payment, the $3,000 a month just gets added to the principal loan balance. So if you start with a loan balance of $500,000, after each month, that will go up $3,000. Do the quick math, right? 3,000 times 12, $36,000 a year would be added onto the principal of that balance over that 1 year period. Now, remember, the great thing about a reverse mortgage is also you probably also have an appreciating asset. So if your home's worth $2 million, it may be worth, $2,050,000 3 years from now, or $2.2 million or $2.3 million. There's no guarantee, but typically if you have an appreciating asset, you're offsetting, in some cases, you're offsetting that reverse mortgage. This is a great program for the right person. Is it for everyone? No. Is it for someone that has a great pension, Social Security? I'll give you two stark differences and examples, okay? You have one person that has a home that's worth $2 million, they owe nothing on it. That person gets $7,000 to $8,000 a month in pension and Social Security, and they don't have any debt. There's probably not a need for them to get a reverse mortgage unless they want to make a big transaction or remodel their home or do some extensive, or again, give money to their grandchildren or children or whatever. They're probably going to be pretty comfortable living on that $7,000 or $8,000 a month. Let's take the same example, but a $2 million home that you own free and clear. This person or this couple, they're getting $2,500 a month. So they could barely make ends meet. They have a hard time paying groceries, utilities, property taxes, homeowners insurance, just the basic dental, medical. They have a hard time. They're going in the negative doing this. And let's say you're 75 years old. You're still healthy. And every month you're going in the negative. For someone like that, a reverse mortgage might be the best option for them. Now, again, it's not for everyone. Maybe you have a significant amount of savings. Let's say the person with a $2 million home only has $2,500 a month coming in income, right? That's not much at all. But let's say they have a savings or an IRA paying them, $300,000 or $400,000, paying them another couple $1,000s a month. Okay, so then maybe they're pretty good. Or maybe they have access to other potential income, right? So everybody's situation is different. I will tell you this, again, if you're listening to this podcast, and if you have a parent, grandparent, aunt, uncle, neighbor, someone you love that you think might have the ability to get a reverse mortgage, and you see them living in a tough situation where they're house rich and cash poor, they might be the right candidate for reverse mortgage. Now, again, this is not, some people mislead or mistake when we share education information. This is not selling. Yes, we do reverse mortgage. We also do first mortgage. We do second mortgages. There's a lot of stuff we do. So we educate people on those too. This is no different. We're educating the consumers, the world, on reverse mortgages. It's a great product for the right person. The only way you know if it's the right for you is to educate yourself on it. So if you have any questions about reverse mortgages, give me a call, check in. We have a team of people along with myself that facilitate you for these reverse mortgages. You know how to get a hold of me. I'll remind you again during the show, area code 408-838-9060, or you can email joe@𝗪𝗜𝗠radiolive.com. That's the reverse mortgage. There's a lot more that goes into it, but that kind of gives you a summary. The best thing you could do to find out more about it is give me a call, check in, and we can, spend 30 minutes on the phone doing a consultation about reverse mortgages. That simple. All right. So let's move on a little bit and talk about some alternative financing in terms when you have a market like this where interest rates are about 7.5% or so, 7 to 7.5%. What I hear in the marketplace all the time is everybody's paralyzed and frozen. They don't want to move up. They don't want to sell their home because they have a 3% interest rate. Why would I sell my home with a 3% interest rate? Why would I go do that and buy another home at 7.5%? I get it. In theory, that makes a lot of sense. But let me explain some reasons why you shouldn't be paralyzed and you should be armed with more education and information instead of listening to the media. Too often times, I'll tell you right now, the media in general is the worst place to get your information. If you're getting your education information from the news media or some of these cable channels, I'm telling you, don't take this the wrong way, but they don't inform and educate for the benefit of people. Usually they express their opinions and their thoughts and what they want to say based on some belief or based on something an advertiser is trying to sell them or whatever is going on. You have to be careful, and a lot of it's drama. So let's talk about some alternative financing in a market like this where interest rates are 7 to 7.5. First, let's talk about private lending. This happens all the time. Someone needs a loan on a property and they want a second loan. Let's say their primary residence worth $2 million. They have a first loan on it for $500,000. They really don't want to mess with that $500,000 loan that they have on their property at 3%. I get it, but they really need money. They need to pay off some debt. They need to pay off some education. They want to remodel. They want to do something. Well, there's home equity lines a second. There's also private money. And people might say, well, why would you do private money? Well, right now, believe it or not, private money, okay, some people refer to it as hard money, whatever you call it. Private money lending is out there and it's available for a lot of great programs and people that operate these. And because the prime interest rate right now is 8.5%, and because most home equity lines of credit are based off prime, so typically if you were to go get a home equity line of credit right now, they would say, great news, we have this $400,000 equity line for you, prime plus 1. What's that mean? So that means your interest rate is 8.5 plus 1%. So your interest rate is 9.5%. Think about that, 9.5%. Interest only, okay? Well, you could go out and get a hard money or private money loan for 9, 10, 11% as well. And the benefit is, in some cases, You don't have all the headaches of the paperwork. You don't have to qualify technically because they really give you the money based on the property value instead of you technically qualifying. Don't get me wrong, you have to be able to make a payment, but it's not so stringent like the regular conventional financing is. So there's private financing that's available out there. Here's another thing that a lot of people don't know about that's happening right now. A lot of people, your parents, your grandparents, your aunts, uncles, they will personally finance and fund a property for you. You might say, well, wait a minute, what are you talking about? Yes, we're talking about personal individual bankers, right? You don't have to go to a bank to get a loan. I talk to people all the time. Let me tell you, on a regular basis, some parents, I'll give you an example. Let's say their children are looking to buy a home for $500,000. 20% down is $100,000, right? Let's just do a quick example with the math. So they have the down payment of $100,000. They want to buy this house for $500,000. They want to borrow $400,000, but they're looking at a 7.5% interest rate. And God, we technically don't qualify. And even though we make good money, they're not looking at our income the way they should because it's Fannie Freddie and it's more, it's complicated, right? So I know a lot of parents or people, family members say, I'll tell you what, I will personally finance that for you. You say, well, how does that work? I thought you had to use a bank. No, you don't have to use a bank. Me as a parent, you as a parent, anybody could draw up a contract with the real estate agent and say that they're borrowing $400,000 from their parents, aunt or uncle. They draw up an agreement. They decide on an interest rate. Maybe they're doing them a favor. So instead of the 7 to 7.5%, they give them a 5.5 or 6% interest rate. And they do maybe like a 2 or 3 or 4 year balloon term. And that gives these people, these young kids or people start up, that gives them the ability to go out and buy a home and refinance out of their parents' loan in the next 2 or 3 years. I hope I'm not moving too fast. Sometimes I have a tendency to do that. The point here is, the message that I'm trying to get across is that there are other options and alternative financing other than just going to a bank. I can tell you the worst place to go right now, and hopefully people won't take this the wrong way. The worst place to go for money right now is a traditional B of A, Wells Fargo, City Mortgage, Chase. I'm sorry for those people. If you work out there, if you bank there, maybe they have great savings accounts or checkings accounts. They're the worst places to go for money right now. The reason why, the market's so tight, rates are so high, their risk tolerance is extremely high. So they're not going to lend money to someone that you might look at their profile and go, why in the world wouldn't they lend money to these people? Well, because maybe they're commission only. And if you don't have a job for at least 2 years that pay you at least 2 years of commission, guess what? Lenders won't recognize your income. You could be making $50,000 a month, but you just started your job a year ago and it's commission only. They won't count that $50,000 a month until you have a job where you go for at least 2 years making that. There's a lot of things that people don't understand with financing. Now, someone like myself, I'm into mortgage banking, so I'm more flexible. If you come to me, that's why a lot of people come to me. I could work with the Chases and the Wells Fargos of the world. Yes, I can, but I don't have to. So I'm not stuck with them in their rigid guidelines. I could go to other banking operations. I could broker loans if I have to. I could look at other investors if I have to, because I could do that. I have the flexibility to do that. So that's why a lot of people come to me and say, Joe, what is the best way to finance A, B, or C? And we look at their options and we help them. So when I hear this paralyzation in the marketplace, the alarm sounding off, oh my God, interest rates are 7.5%. No one's going to move. No one's going to sell their house. Well, that's not true. That's not true. If you really want to do something, there are ways to do it. And let me share an example I just shared with a business partner of mine at lunch today. It was a perfect example. He said to me, this is the person that's in the business. He said, well, Joe, why would someone, even if they love the house, they wanted to sell their house, why would they give up their 3% interest rate to go buy a home and pay 7%? And I'd say, hold on a second. That's an option, but it's not the only option. And he said, well, what do you mean? I said, let me explain to you. This is a great option that a lot of people don't think about because they get hung up on the rate and the negativity of the rate itself. Okay. So let me give you an example of what I do all the time. and I want to educate and inform you. If I don't get anything across today, please listen to this. It's a rate buy down program. Okay. I'll give you an example. Let's just say the average rate's at 7% today. And wow, no, boy, I love that house, but I don't 7%. You do the qualifying, you look at the numbers, you think, don't really want 7%. You don't live to get 7%. Well, what do you mean, Joe? What do you mean? So you're looking at a house. I'm going to give you an example. We've done this. We do this all the time. When I prepare buyers to look at a home to put in an offer, I always prepare the real estate agent that's representing that buyer to look for a credit, seller's credit. I'll give you an example. Okay, you're out looking for a home right now for $1 million, let's say, and it's on the market for $1 million, just for sake of this conversation, $1 million. And they're getting some offers of 950, 975, 920, and they haven't sold yet. And I go in with my buyers and I say, if I'm the real estate agent, you're working with me, I say, I'll tell you what, offer them $1 million, what they want, but ask them, part of the deal is you're going to pay them $1 million, but you want a $40,000 credit, seller's credit. I'm going to go, what do you mean? You could do that? Absolutely, you could do that. So I could request in the contract, I'll pay you $1 million, but I want a $40,000 or $50,000 seller credit. So you take that seller credit and you bring it to your loan. And guess what? You work with your loan officer like myself, and we use that $40,000 or $50,000 to do what? To buy down your interest rate to 4.5% to 5%, and maybe lower, depending on what your loan amount is. Yes, you could do that. And yes, we are doing that. See, this is one of the things that the media doesn't talk about. This is one of the things that news, a lot of people don't talk about because they want the dramatics. They want the drama, the theater. Rates are at 7.5%. Oh my God, the world's going to collapse. No, money's money. When I bought my first house, it was 11.5% adjustable. And so there is always ways to do things. There are always ways to be creative. There are alternative financings, what this show is about today, that I'm doing specifically the show on today. I want to get across to you today that there are all kinds of ways to finance. You still could buy with 0% down. You could still buy at 5% or 10% down. There's ways, there's so many different ways. It's just that so many people, unfortunately, they don't educate themselves with someone they trust. They listen to their friends or family members or media, or they read an article and they go, oh my God, this person said. Well, of course, they're trying to sell papers. They're trying to sell ad space. So, alternative financing, as I wrap things up in the next couple of minutes. We started by talking about reverse mortgage. That is alternative financing. That is something that's not used on a regular basis, but is a great program for the right person. So think about a reverse mortgage. You have to be at least 62 or older. You have to have a certain amount of equity in your home. There's other things you have to follow. But in general, call me if you know anybody, or, this podcast, forward it to friends, people, coworkers, neighbors that might be able to benefit from that. Reverse mortgage. I'll do a quick summary of what we talked about. Alternative financing. You don't need to go to a bank. You could use your parents or a friend. They could do personal financing for you. You could work something out that way. You could get a hard money or private money loan if you're putting enough down payment on it, or you need cash out of a home. You don't need to go to a traditional bank. Thirdly, as I mentioned, another creative way to do it is to get a seller credit on a purchase so that you use that money to buy down your interest rate. Think about this. Let me just give you another example. And this is what just really frustrates me because so many people listen very generically to news that is more loaded with dramatic theater than reality and details. Out looking for a home. You really want this home. You're stumped and you're frustrated because rates are 7%. But you could get a $50,000 premium because you're selling your home. Now follow me here. Because inventory is low in most of these areas like the Silicon Valley right now in Santa Clara County, because inventory is low, guess what? You're going to get a 10 to 20% premium on your home today that you would not likely get if we didn't have low inventory. So follow me here. So if you put your house on the market for $1 million, and because it's low inventory and because of demand right now, you get 1.1 million instead of $1 million. You just got yourself $100,000 premium to go out and use it for even to buy down some credit on your next house that you buy. Now, some people would say, well, Joe, that's additional profit. I didn't want to use 40 or 50,000. I know you don't, but follow me here. If you really fall in love with a house that you see, but you're deterred because of 7.5% interest rate, there are ways to get around that to get yourself into a house or the property or the investment property or the second home that you want. There are ways to do it. And that's the message I want to get across today. Alternative financing, there are all kinds of ways to make something happen when it comes to purchasing, refinancing, or doing a transaction on a home. And that is the message I want to get across today. All right, as I wrap things up, thank you again for tuning in. Please share this with a friend, family member, neighbor, coworker. Share it with as many people as you want. Be sure to download our podcast. The ways to reach me for any information at all, 408-838-9060, 408-838-9060. You can email me, joe@𝗓𝗡radiolive.com. That's joe@𝗓𝗡radiolive.com. Please stay tuned, and we will have some guests coming up, some surprise guests in the next couple of weeks. I think you'll enjoy very much. Reach out if you have any questions. As always, thank you for your time, and thank you for supporting the podcast. We get thousands upon thousands of downloads each month, and I can't thank those enough. Also, I don't want to forget today before I duck out here to thank those people that email me and text me their questions during the week as well. I appreciate that. Again, Joe 𝗘𝘀𝗁 with Real Estate Radio Live. Thanks again for tuning in. Continue to follow our show. Thanks again. Have a great afternoon. Can't wait to be with you guys next week.
You've been listening to Real Estate Radio Live. For more information on today's program, visit 𝗓𝗡radiolive.com. That's 𝗓𝗡radiolive.com. Subscribe to our podcast. Discover more at 𝗓𝗡radiolive.com.